Hey, welcome to the Guaranteed Retirement Guy show once again. And today we're going to be talking about annuity withdrawals. Annuity withdrawals. Can you do it? No, usually not without a big penalty. But there are some exceptions, okay? So if we're looking at withdrawing money from our annuity, first I would ask you, why are you buying one in the first place? Okay, if you're going to buy one and you want growth, then you need to be using money that you don't need for emergencies, right? So if you want to live off of interest, well, that's another thing, and they do allow for that. And you can take the interest if it's a multi-year guaranteed annuity. You can take that. Typically, they'll allow you up to 10% a year, sometimes 5%, depending on the multi-year guaranteed annuity, or what I like to refer to as a MYGA. So as far as withdrawals from those, that's typically what you are limited to. But there's also surrender charges, okay? So let's talk about those. And let's talk about how to get out of the surrender charges. There are ways to get out of them. How about that? So let's take a look at that. I'm going to share my screen here real quick. Let's look at the fixed annuities first, okay? I'm just going to bring up a few things here. Okay, so this is looking at the Annuity Palladium fixed annuity, okay? This is a MYGA, a multi-year guaranteed annuity. As you can see, with a $250,000 investment, they're giving me currently a 5.45% rate, which is great. All right, so we're looking at that and they're saying, all right, well, we're getting all this money. This is great. You can see my earnings, which are great. And let's see, what are the rules? Okay, first year, interest only. So I can only take the interest out, which the first year is $13,625. All right, so after the first year, you're taking out $13,625. After that, you'll notice up here, it says years 2 through whatever, if it's a 10-year, which in this case, it is a 10-year MYGA, then they're allowing you to take 10% of the account value. So you can see at this point, your account value, maybe it's earned $14,368, but if it's worth $277, you can take $27,000 out without any surrender. Again, just remember, if you do that, you're going to hinder your earnings because this is compounded. So this is just, these numbers here that I'm showing, this is based off of your account never taking a withdrawal. Okay, this is based off your account, you leaving your account alone and letting it grow. And then as it grows, it compounds, and every year that higher account balance is earning a 5.45. So, which is great. So we'll look at that, but you'll also look over here on the surrender charge schedule. So you can see you're getting an 8% ding. If you were to take out the full 250, they're going to charge you an 8%. Okay, if they do 7%, they're going to charge you 7% to take that out, okay? So that's something that you need to be thinking about as well. 6%, 5%, 4, 3, 2, and then after years 10, you'll notice that there are no charges whatsoever, okay? So that's how you get it without a penalty, okay? But there are ways to get that money without being charged the penalty. Okay, so let's take a look at this. I actually pulled up the brochure for this annuity, and I really like this one because it says access to your money when you need it the most. For those unexpected healthcare events in your life, the Palladium MYGA provides a confinement waiver, terminal illness waiver, and disability waiver that allows you to have access to your money without any surrender charges, any applicable market value adjustments or excess interest deduction, and blah, blah, blah. Okay, so it just continues to add more as far as, hey, you can have access to your money basically if you have a terminal illness, if you have a disability, if you're confinement, so if you're in a long-term care facility and you need it, they'll let you bypass those surrender charges, which is pretty cool, right? So that's on the MYGA side. Okay, now let's take a look at the fixed index annuity side. Okay, so we'll pull that up here real quick. And I just want to show you exactly what that looks like because the charges are pretty similar. Typically, they'll have a 10-year surrender charge. Some of them are less. I mean, there are index annuities that will have like a 5 and a 7, but the growth is not great. And if you're looking for income, they're not usually the best option. So let me just show you real quick. Surrender charge schedule. You can see surrender charge 9%, 9%, 8%, 7%, all the way down. So that's what you're getting as far as being charged. I mean, if you're going to take your money out, if you've got $1 million sitting in there and in 5 years, you wait till year 5, well, they're going to take 6% out. That's just how it goes. They're going to take $60,000 out. Now, it might have earned over 100 grand by that point, so it may not be so bad, but things to think about. And again, if you stay under that 10% withdrawal allowable amount that they will give you, and every index annuity that I've looked at will allow you to take up to 10% out a year without any problems. Okay. It will definitely affect the income, though. If you plan on using that for guaranteed income later on, that will affect that value. Okay. So just remember that. So anyways, hope this helps. When you're looking at investing into annuities, you have to think about the whole picture. Okay. If we've got a 10-year plan where we know we don't need the money, then great. You don't even need to worry about the surrender charges. Okay. But if it is something where you're wondering, hey, I might need access to this, I might have an emergency, well, then you might not want to invest all of your money into it. You might want to have some emergency savings put aside so you can let that money compound. Then, of course, if you just want to have the full amount in there and you know you're never going to need it, but you want to have access to it in case you're confined to a long-term care facility, or maybe you have a disability, right, or terminal illness, they do allow you to have access to your money in a MIGA annuity for that. Okay. Now, there are different index annuities that will allow that as well, but it's just a case by case, and it depends on the company. It depends on the rules that they have, but a lot of them will have that as well as a benefit. But again, you have to check the company because different rules, different benefits, different withdrawal charges, just they're so different from company to company. And we would take a look at that. So whenever you want to take a look at either a fixed annuity with a guaranteed rate, or a fixed index with a whatever the index earns, it earns, or if it has a roll-up rate, then it earns that for income purposes, then let me know. We'll take a look at it together, and we'll pick out the one that really fits your needs. Because you could see from my software, I look through everything. I look at all companies, and I really want to give you the best annuity for whatever your situation requires. So hope that helps. Thanks for listening, and we'll see you next time.